Hey everybody. So I had to go live with this information. If you own a home in Denver or are looking to buy a house, you're going to need homeowners insurance. And this video is for you. Today, I'm going to talk about the top 5 things you need to think about. And this relates to my experience with my primary residence, a rental, and our autos. And so let's unpack this. I'm Ray from the Mortgage Maestro Group, and my sole goal on this channel is to educate you about building wealth through real estate. And yes, that involves how much money you're throwing at your insurance policy. So let's break this down, okay? So recently, give you a little backstory first. Recently, I got notified that my primary residence policy was renewing. That got the wheels going because ironically at around the same time my auto insurance policy was going to renew as well. The rental policy is outstanding by itself because that policy is outside of the mortgage, therefore it's paid monthly. So those kind of changes aren't as impactful as if you make a homeowner's insurance change on your primary. You want to be tactful about the timing of it, because if it's in your escrow account, you really want to do it at the time of renewal. You can do it outside of that, but at the time of renewal, you can kind of slide it in there so your escrow department pays it on your behalf. So a little bit of tip there. So let's go with number 1. This one here, I think, is the lowest hanging fruit to save money on your insurance premium, and that is the deductible. Now follow me here, because if you have a mortgage, you can't have such a high deductible because the mortgage company might not be okay with that. But I commonly see the default deductible used is $1,000. Now you can easily look at having your insurance agent or broker show you differentials at $2,500 and even $5,000 for the all perils deductible. Now, I did this recently on my primary, and it resulted in a substantial savings. On mine, I elected to go with $5,000. That's really something you got to think about, is where are you at financially? What is your personal savings? And reason behind this, quite honestly, is if the policy is going to be X dollars at $1,000 and Y dollars at $5,000, it's going to be noticeably less if your deductible is $5,000. So to me, it's just a math equation. What's the annual savings? And if it's $4,000 more in deductible, $1,000 to $5,000, okay, how many months or maybe a couple years of that will ultimately result in me saving a bunch more money on the annual policy? So to me, it's a financial equation there to decide what's the right deductible for that all perils. Now, number 2, let's talk about bundling, or as I would say, unbundling. What do I mean by that? Well, you would think that I would have bundled my primary and the auto and that rental into one carrier. Wrong. In fact, I unbundled. And what I mean by that is, when I got my notice for renewal, my policy was going up over $3,000 a year on the home. Okay, so being a veteran, I worked with a company that specializes in working with veterans and found I was going to save, I think it ended up being over $3,000 a year on the homeowner's policy. So of course you think automatically, I'm going to bundle the auto insurance. Didn't happen. Why? Because my auto policies would have gone up $2,700, effectively wiping out any reason for moving that homeowner's policy over. So what I ultimately did is go with an auto insurance company that just focuses mainly on cars, saving some money for me. And on the rental policy, honestly, there's a company out there called Steadily. I'm not giving them a shout out, but they focus primarily on investment properties, and they've worked well for me with multiple investment property homeowners policies. So there you hear me talking about unbundling rather than bundling to save money on homeowners insurance. It took time. It was a little tedious, I gotta be honest with you, but in the end, it did save me thousands of dollars to separate out those policies between the auto, the primary home, and that one particular rental policy. So number 3, this will become the policy review. If you're signed up for electronic disclosures, you may not get this notification, or you might delete the email, but 60 days before your policy is set to renew, they will send you what is expected to be for your insurance policy for the next year. So think about it. This is the optimal time to look that policy over, go through the different coverages, call your agent, call that call center, whoever it is, call your broker, go through the policy, because I've noticed over the years that by default, they go up more because they're automatically generated from what I've experienced experienced than they should. So take the time. This will save you money. Okay. So if it's in your escrow account, do this. Call your escrow department if you're thinking of making a change, because you do find through shopping that it will save you enough money to make that change. Call your escrow department, ask them to put a temporary stop payment up to 30 days before the renewal so they don't send it to the old carrier and you've changed carriers and then you got this money train that you have to unwind. So you can ask the escrow department if they will do a temporary stop payment on the insurance premium so you can take care of this if that's what you've decided. So then today, like I said, it is something that saved me a lot of money. $2,600 on the autos. It was $3,000 on the primary, and it was about $400 to $500 for the year on that rental property. So some of the areas to look at with your policy for review, I would say, is your roof. What do you know about the shingles and the class? So ask that agent or that broker if there are any discounts if you in fact have a certain roof with a certain class of shingles. For me, it actually was a class 3, and those shingles, even though that roof is 20 years old, it's a Spanish tile roof. That's a $600 savings had I not been asking the question about the class of shingles on this particular roof for our house. So we're going to go into the number 4 thing to think about there: unnecessary coverages, right? So as an example, how much coverage are they throwing in there by default for personal belongings? So this is a very personal choice for you, whether it's art, jewelry, whatever that may be. Have them talk you through what's covered in the personal belongings, and then if you actually are going to need it or not. If you were to have to outfit your whole house, if something tragic happened and it burnt down or something, how much would it really take you? And what are they including in the personal belongings versus what are they excluding? So this is a great thing to talk to them about. What is included? What is excluded? Don't assume anything. There were some coverages when I was making the change to my primary home policy that I specifically asked them to send me the documentation, because they said, well, it's not shown as excluded, so it's included. Well, I want to see that in writing, because if there was ever a claim, I don't want that claim to be denied. So those unnecessary coverages. So lastly, number 5, to not forget. Okay, so I've got a few of them listed here. Definitely don't overlook things like water backup or sump backup. If that's not included in your policy and there is water in your house, what will happen? Are you going to be on the hook, or are they covering it for you? You also want to make sure you have a guaranteed replacement cost. I'll bring this up for 2 reasons. One is cost of construction has gone up with inflation. So make sure, even if you're going to stick with your current carrier, that they have revised your coverage for the home for rebuild should that happen to today's standards. I believe, from what I've been told, it is law now that they do have to do that. This also suffices for another reason, which is your insurance policy does not need to cover your mortgage amount, misnomer. However, it does need to have 100% replacement cost. Now that can come by 2 ways. It could come by the standard replacement cost or bonus coverage, which a lot of insurance carriers have in there by default, where that's 25% additional cost, 50% additional, but have the insurance agent explain this to you, because that will also help in the event you need to do a full rebuild on your house. One thing, don't overlook, don't sleep on additional living expenses. If you had to move out of your house, how long for? Is it going to be 6 months? Is it 12 months if there was a full rebuild, or 18 months if it's a full rebuild? Is there additional living expenses if you're put out to help you offset that time of your life where you are not able to live in your house? And then the last thing, I think, liability, right? If something were to happen, how much coverage is there for personal liability? And ask them on incremental increases what you can do there. Now, an offset to this would be that if you have your car separate from your house at a different carrier, that umbrella policy, I learned, and is actually going to be separate for me, because they typically want it on where the cars are. But there are third-party companies that will specifically do an umbrella policy for relatively cheap. I'm talking, $400 to maybe for $1 million a year, maybe $700. These are things to look into. If you have multiple rentals or a lot of equity in your home, are you properly covered for personal liability? This is something to think about. I have additional videos on here relating to building wealth through real estate, other things. If you're looking right now at your interest rates and what's going on, You need to tap into your equity. Videos about should you do a cash out? Should you do a HELOC? If you're looking to buy your first home, lots of videos about the home buying process, closing costs, etc. So make sure to subscribe if you like this kind of information. I like to bring you some more along the way so that I drop into your inbox. And of course, if you want to have a one-on-one consultation, information is in the description below, mortgage-maestro.com/contact us. We'll talk to you soon. Thanks so much.